Hi, and welcome to this episode of the Insurance Experts. It's my pleasure to have on the line Jake Mellor. Jake is a comprehensive wealth planner. Thanks for joining us today.
Hey, my pleasure to be here. Thanks for inviting me.
So I know you have an interesting background. How did you begin in the kind of the wealth management world?
It's interesting. A lot of people do this as a second career or as an afterthought or whatever. I'm the strange duck who started it from the beginning. Meaning, since eighth grade, this is kind of what I wanted to be. I wanted to be a financial consultant of some kind, and now that's what I do. We do tax advantage wealth management strategies, and a lot of that has to do with life insurance of one kind or another.
Hmm.
And even though the breadth of what I do is very wide, so to speak, today we're going to talk a little bit about life insurance because it's a key point that a lot of people miss.
Yeah, and that's a great point. I also noticed you have a lot of letters after your name, and so you've studied this a little bit. Tell me a little bit about your background academically.
Yeah, no problem. Scholastically, academically, I've got a bachelor's degree in finance, a master's in business administration, and a master's in accounting. I also went on to get some other initials. I'm a certified financial planner since 2012. And, if politics hadn't gotten in the way, I would probably also be an EA and a CPA right now as well.
It's funny how the government interjects themselves in our lives sometimes. But moving
Yes,
from
the,
politics.
gov- the government and civil whatever responsibility you want to call it. There's always interruptions in life, which we'll talk about too on the show, I think.
Yeah, yeah. And I think that's a good segue into the conversation for today. We talk about life insurance and it's kind of a theoretical concept, but I think it really brings it home when you have a real story. And I know you have a story to share today. Tell us a little bit about the friend that you had that was looking, to save their farm, so to speak.
Yeah, well, I'm wearing the right shirt, right? This is denim. I actually grew up on a farm myself. And, I obviously became close to a lot of other people who did farming. Let's talk about what could have been a fifth generation farm, but wasn't because of the lack of proper planning and utilization of financial tools such as life insurance. I guess from the very beginning, mom and dad, obviously, they've scrimped and saved, they've been through the tough years, everything else. And, in their day, it was good enough just to have a handshake and an agreement because everyone lived and died by their word, right?
Hmm.
Sadly, um, when father passed away, you know, uh, mother was left with a lot of decisions to make, but she wasn't really left with the best of health. And so children didn't really bother her with financial decisions and concerns or complaints about how things were ending up. Originally, back when father was still alive, all the six brothers and mom and dad shook hands and agreed that, hey, of all of us, youngest brother will take over the farm. He's the one that's going to be with you longest. He's the one that's going to be farming with you longest. And it makes sense because the rest of us were all educated. The farm, we all worked and learned a good work ethic being here. And the farm helped pay for school for all of us. We all have our own vocations. We're all going in our own directions, except for littlest brother. Let him take the reins of the farm. Let him move forward with mom and dad. Um,
So tell,
that's
tell me tell me a
that.
little bit what happened with the family, farm. So you had mentioned that the other five brothers, right, the older brothers, each had their own vocation of different types. So the youngest one has the farm. But what happened to the parents in this situation?
Sadly enough, they both ended up passing away. Mother needed some additional care. She didn't pass away as quickly as dad. There probably could have been some financial planning to help take care of her in the assisted living center and other places. It
Mhm.
wasn't her plan. She wanted to live and die on the ground that she made grow. But she needed some additional care there. And those expenses weren't necessarily planned for. It put
Mhm.
the farm into a little bit of a financial burden
Mhm.
there in her later years, but it was able to take care of at least her before she passed away.
Okay.
It did leave the youngest son in the best financial situation, though.
Right.
And that's when problems really began. And the handshake between the brothers, if it had only been left to them, would have been fine.
Mhm.
However, as would be, life changes. People and things come into our life that we don't necessarily expect. And spouses, as wonderful as they are to their significant other, they're not always the best for the family at large. And in this circumstance, it proved to be the case where the spouses stirred up the ire of each of the siblings to where they felt like they all deserved a little bit more for the family farm that they worked so hard on, the family farm that they sweated and bled on. One of the siblings even lost his eye on the farm through a tragic accident, whatever. And even though they all had their own vocations, money can make people act differently, especially later on, especially when it's only on a handshake deal, when we no longer live in a day and age when your word is your bond. If it's not written down contractually, things happen a little bit differently. So had this family originally, had they funded properly some type of buyout so that there was an equalization of the estate when mom and dad were gone, or had they somehow implemented some of the financial tools that would have made a lot less expensive on little brother the care of mom while she was in the assisted living center, life would have been quite a bit different. And this would have perpetuated into a fifth generation farm. Sadly, though, if I cut to the end of the story just real fast to give you a glimpse of the full picture, little brother had to sell the farm, being pursued legally by his siblings or by the spouses of his siblings. He ended up having to sell it at a fraction of the true valuation of the farm because there just wasn't a buyer nearby that would have paid full price, especially when they caught wind of the legal stirrings, so to speak, amongst the siblings. He ended up leaving town. Selling everything, and everybody, all the siblings, it just became real bad blood because they were only able to get a portion of what they felt it was really owed. And it was all due to their doings, their legal stirrings, so to speak, rather than, a very thought out, properly executed plan, so to speak. And again, if we go back to 2020 hindsight, right? If they had the farm had spent money on, a long-term care policy and properly executed second to die life insurance plan on mom and dad, all of that could have been taken care of with tax-free or tax-exempt dollars, and it would have helped enrich, not beyond what was compensatory based on the valuation of the farm, but it would have helped equalize the estate of this farm passing from one generation to the next, as well as all the proper heirs of the estate, which would have been all the siblings.
Right. I think you touch upon a number of different points there. One is having the plan is really important because splitting the business after the fact obviously can lead to conflicts and dispute. The other is there are solutions for this, and I do want to kind of touch upon the insurance aspect of this. You had mentioned that there were ways to design the situation so that you have a way to be able to fund this continuity, right? This getting to the fifth generation. Tell me a little bit about what solution could have been provided potentially for this family.
Yeah, so corporations all over the globe, and this is not necessarily the most efficient way, but they put together a sinking fund for the rainy day or for if in case this scenario happens. That's not the most efficient way because that's very costly. That's done with after-tax dollars or whatever, right? The easiest, most inexpensive way would have been to purchase a life insurance policy. And it could have made even less expensive had it been a life insurance policy on mom and dad, a second to die policy that is triggered upon the death of the second person. Had little brother purchased a policy on his parents to help equalize the estate if in case they were to both pass away so that he could then properly buy out his brothers on an agreed upon price or valuation of the farm, that could have all made, it would have at least made the spouses happy, right?
Yeah.
And that if that conversation had happened, due to the poor health of the parents, when they were thinking about, hey, maybe more than just this handshake, hey, maybe more than just little brother should own this thing, and they didn't have those discussions. Communication. So, there's the money, there's communication, and there's timing. And timing is never convenient, right? And it wasn't convenient to sell the farm when they had to sell it based on legal ramifications. If they had the right time to at least sell it to the right buyer, they could have at least had closer to valuation of price. But the best scenario is, of course, not being forced to sell But having funds provided through the life insurance of mom and dad could have at least bought out his other siblings so that he could have maintained ownership of the fifth generation farm that could have been.
Right. And one of the reasons we do these videos, it's hard for people out there to anticipate these issues if they've never seen them before. But you can see what the outcome could have been, in an alternative world here had they be on this plan early. So thanks so much for joining us today, Jake. Hope to have you on future episodes too.
Hey, no problem. Pleasure to be here. Glad I could help.